first thing that was pointed out by multiple different financial institutions that I helped shop for her is that she didn't own any real estate. She didn't have any high-level auto loans. She had nothing on her credit report that indicated that she was going to be able to handle the kind of debt that she was looking to take for her business. There's still a lot of uncertainty for these banks and financial institutions, and I wanted to give you just a quick snapshot of how important it's going to be for you to have things that you're going to be displaying to these banks to try to demonstrate your qualifications or demonstrate that you're good for it, basically. Basically, when they start to take payments, don't use the money that they lent to you. Let them take the payments from it. One of the biggest ingredients to financial success is going to be controlling your expenses. Two of the biggest expenses you're ever going to incur is going to be housing and transportation, just as an example. The other side of the coin is, if you truly want to win financially in this system, you're going to have to go out and create some kind of business for yourself, or at least some kind of entrepreneurial endeavor in most cases to advance yourself financially. Bringing that all full circle, these are three areas that you're going to have to focus on financing, meaning that your credit score and credit report are going to be essential to getting approved with lenders at the best rates and the best terms. With that having been said, banks today in this current environment are terrified right now. There's a lot of uncertainty on so many different levels that affects their appetite for lending, affects their ability to allow money to flow through the system. Interest rates are still high. There's geopolitical risks of things going on around the world that can directly impact the way they do business. There's domestic risks. Since the election of 2024, there's a lot of uncertainty in politics and fiscal policy. The list goes on. Banks are really nervous right now. So that basically means they're going to be looking for more than ever when it comes to risk mitigation. They're going to be looking for more factors than ever to feel comfortable lending to you at a higher level. And again, this could be anywhere from a high-level credit card to an auto loan, to a mortgage, to a business loan. So what do you need to have in place in order to make sure that you have the best chances possible? I'm going to give you a little bit of a story from a business client that I was helping submit for a line of credit. And I also helped ship a couple other options for her in case we weren't able to fulfill that need. Now, this young lady is 25, 26 years old, fresh out of her college years. Even with that being the case, she had really good income. She had over a 780 FICO score, but she had a brand new business. She didn't own anything. So when I went to help her apply for this business line of credit, and I also checked a few other options that may be available to her that may be more lenient than the institution that I'm working for, in every single case, she had no shot. Now, the biggest problem was her business wasn't old enough. But I want you to stick for a second because there's a deeper point behind this that also contributed to her not having access to any capital. She had a great income. Her business was brand new. That was a big issue. The biggest problem that she ran into outside with those more lenient financial institutions and entities was if they were going to have to lean on her personal financials, which is exactly what they were going to have to do because the business had no revenue, the business had no collateral, the business was brand new, there was no financial reputation for the banks to lean on and say, okay, this business might be able to hold itself up and repay this debt back effectively. There was nothing they could measure to gauge that out. The problem was if they're going to lean on your personal financials, now that has to be perfect. And the first thing that was pointed out by multiple different financial institutions that I helped shop for her was that she didn't own any real estate. She didn't have any high-level auto loans. She had nothing on her credit report that indicated that she was going to be able to handle the kind of debt that she was looking to take for her business, which was around $150,000. She didn't have anything on there that was mature enough to demonstrate that she'd have the ability to repay effectively through the current economic cycle that we're in. This is somebody, again, with nearly 6 figures in income in southeastern Louisiana, where 6 figures in income is still really good. FICO scores over 770, 780, and there still was no shot for her getting approved for what she needed in her business lending needs. They didn't even counter her. So what that basically means is an example, and I'm seeing this with credit cards, I'm seeing this with other forms of lending. Banks are leery as ever. You combine the fact that interest rates are high as they've been in over 20 years still, and banks are seeing you as a higher risk than they would in a more normal economic cycle. That basically means that they're going to either approve you with worse rates or higher rates, or they're going to not approve you at all. You have to focus on making sure that you build a strong credit profile into the economic system that we're in, because that certainty may not come back anytime soon. Even with interest rates coming down and other factors and mechanisms moving, there's still a lot of uncertainty for these banks and financial institutions. And I wanted to give you just a quick snapshot of how important it's going to be for you to have things that you're going to be displaying to these banks to try to demonstrate your qualifications or demonstrate that you're good for it, basically. They're going to have to really be strong in order to get qualified at all or get qualified at reasonable rates So making sure that if you have any kind of position, use your savings or CD secured loans, for instance, at different financial institutions. Many of you may know this as the Navy Federal Pledge Loan hack situation, basically where you put money on deposit and borrow against it and use that to bolster your credit report. Use that payment information and that lending data to bolster your credit report, because it basically just reports as an installment loan. Is a really good example. If you have a decent amount of cash, this can go really well for you. If you can do $20, $30, $40, or $50,000 on a pledge loan, put it into a savings or CD, go to that institution, borrow from it, let that money hit the checking account there, and let it auto draft out of the money that they gave you. Basically, when they start to take payments, don't use the money that they lent to you. Let them take the payments from it. And you also can free up a lot of your cash by throwing a chunk of that money at the payment. So if it's $50,000, you can take $45,000 after the first month's reporting on your credit report. You have to let it report on your credit report first. But after that, you can take maybe $45,000 or $47,000 and pay that chunk off. It helps your utilization on your credit report, so your credit score is going to rebound from that new debt. And you still got enough room left for months and months and months and months of payments to just chip away at the remaining $5,000 or $3,000. And all of that is payment history. It helps your utilization and it bolsters your credit report, showing that you had a sizable loan that you pay back effectively or are paying back effectively. And the longer you have it, the more comfortable banks are going to feel. This is just one example of taking what you have and making something of it that can help push you forward when it's time to go for that big auto loan, that business loan, or that mortgage. Banks are very uncomfortable. You need to do your part in positioning yourself to look as low risk as possible. And this is a live example that I had with a client who I think in a previous economic cycle would have at least got counter offered on a line of credit or a business loan, didn't have a shot. And that's even with some really low level underwriting institutions, meaning that they are not the most demanding or the most lenient financial institutions that I could find. So it's tight out there right now. Leverage what you have to try to build up the data points that you need to look good in front of these banks and financial institutions, so you don't have to worry about paying more in interest on housing or transportation or business lending than you have to, or messing around and not getting access to the capital at all and being in an even worse position. Comment down below. Let me know if you've run into any snags where banks are being harder on you in a lending scenario than you've experienced in the past. Or let me know if you're in the opposite position. You have a bolstered credit report, you have good financials and good data. Let me know how banks are treating you when you go to apply for these various different lending products. Comment down below. To all my pioneers, welcome back. To my new viewers, welcome in. As always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon. This is my blueprint for financial empowerment and self-sufficiency. This is my blueprint for optimal health and body mastery. This is my blueprint for mental, physical, and spiritual momentum. This is my blueprint for prosperity.